Hello, everyone. Welcome. This is Min Fan, Executive Director of United States Heartland and China Association. We're delighted you can join us today. Before we get started, two housekeeping items. First, throughout the webinar, all attendees can use a Q&A option to enter questions. We did receive quite a bit of questions before we started, and we will try to address them as much as we can. Second thing is at the end of the webinar, when you leave the Zoom window, there will be a survey popping up. It wouldn't take you more than a minute. We really appreciate if you can take the time and just share with us what you think and what we'd like to hear more. So again, welcome, and let me go turn to our President CEO and former Governor of Missouri, Governor Holden, to give his opening remarks. Governor Holden.
Thank you, Min Fin, our Executive Director. And thank you, Jim Schultz, the founder of Open Prairie and former Illinois Secretary of Commerce and our USHCA Agriculture Committee Chair, who will be moderating this webinar. I'm especially pleased to have the former Governor of Iowa, former U.S. Secretary of Agriculture, and a personal friend of mine, Tom Vilsack, as one of our distinguished panelists today. We will be discussing one of the most important issues facing our heartland region, U.S. China trade and the future of agriculture. We could not have gathered a more capable panel than we have here today to address these issues. Thank you, our distinguished panelists, for joining us today, and everyone who has signed in to be participants in today's webinar. For those who are new to our webinar series, we titled this webinar series, The Way Forward, because we must look around the bend of history and see how we could shape the future, not let the future shape us. We must become bridge builders, linking our assets with the opportunities that offer our heartland region greater economic success. One of the bridges we focus on is the bridge between the heartland and China. We believe that there is much to be gained through the collaboration between the two largest economies in the world and our people, who have much in common in our aspirations for a better future. We are grateful for the sponsorship of the China-U.S. Exchange Foundation and all our American benefactors who support made this webinar possible. The United States Heartland China Association represents the 20 states from the Great Lakes to the Gulf of Mexico. Of the top 15 agriculture states in the United States, 11 are in our heartland region. Our heartland states are leaders in soybeans, corn, rice, cotton, chicken, pork, and cattle. In fact, Iowa is the leading agriculture commodity producer for 4 of these commodities. I, personally, like many of you, come from a rural environment. These issues are personal for all of us. The values learned, partnering with your neighbors, trusting each other, are values instilled in me as a young person growing up on the family farm. A thriving agricultural industry in our heartland region will mean a better future and a world for all of us and for all future generations. I look forward to hearing from our panelists how we can work together, build bridges of economic security between us and other countries, feed the world, and improve our global environment. This will determine our future and the world. Thank you again, and welcome to today's webinar, The Way Forward, U.S.-China Trade and the Future of Agriculture in the Heartland.
Thank you, Governor Holden. And with that, we will now turn to our moderator, and Jim Schultz. Jim Schultz is the chairman of our Agriculture Committee and also the chairman and founder of Open Prairie, as Governor Holden mentioned. And also, as Lee mentioned earlier in our private chat, he served the state of Illinois back in 2015, 2016. With that, I will turn the podium to Jim to introduce the panelists.
And Min, thank you, and thanks for all the hard work you put into making this a possible event. And Governor Holden, your leadership in organizing the United States Heartland China Association is a great opportunity for us in the Heartland to seize the moment and to build better relations with China. One of the things my grandmother always taught me is that when you quit learning, you quit living. And we live now in a time where we're all learning new technologies, and to think that 90 days ago we'd assemble in this way versus in a big conference hall is a new way for all of us to continue to learn and to live. With that, I'd like to introduce the panelists that have joined me today. It's a distinguished panel, and I think we'll have some really good insights into where we are and where we're going. Just quickly, Jennifer Hillman is with us. Jennifer's the Senior Fellow for Trade and International Political Economy at the Council on Foreign Relations. As Governor Holden mentioned, former Secretary of Agriculture Tom Vilsack is with us. He currently serves as the President and CEO of the United States Dairy Export Council. Rob Donkowski is with us as well. He's a global agribusiness leader for Ernst & Young or E&Y Partners. Rajiv Singh is the co-chairman of Food Shot Global and the retired CEO of Rabobank North America. And Lee Strong, who's a partner with me at Open Prairie and our Rural Opportunities Fund, is the former CEO and chairman of the Farm Credit Administration. And finally, from Shanghai, Dr. Zhu Li, a research fellow at the Institute for World Economy Studies at Shanghai Institute for International Studies, is with us. So it's great to have all of you with us, the 6 of you. We hope that they give you some great insights. I'm going to first start with what I'll call scene setting, and where have we come from and where are we today. I'm going to direct my questions to Jennifer Hillman and Dr. Xu to talk about this topic. And in particular, the past 3 years of trade wars between our two countries has created economic hardship on U.S. farmers. Could the two of you please provide some insights on the current status of the Phase 1 trade agreement, along with your perspective on other issues impacting global trade? Dr. Xu, would you like to lead us, please?
Okay, thank you. Thank you, Mr. Chair. I'm very glad to join this webinar, and I think it's also a very important topic for both China and the U.S. are concerned with the current status and how to implement the Phase 1 trade deal. Now, I think the maybe just briefly mentioning several aspects. First, you mentioned that the past several years of the trade war, actually, it really has caused great damage to both the Chinese and the U.S. Economies. And in particular, I think the agricultural sector. And now, so that's the thing why we say that the Phase 1 trade deal is really a very important document between the two sides. Because actually, one of the major effect of this Phase 1 trade deal, actually, personally, I think it's it works as a kind of a ceasefire agreement between China and the U.S. So these two countries gradually withdraw from the past two or three years confrontation, and now really settle down and calmly to negotiate on what or even compromise on certain terms. So that's the thing I think very important. And also I think apart from some very specific topics, I think one of the work of this outcome of this agreement is that it establishes so-called electoral evaluation and the dispute resolution mechanism. Actually, it establishes so-called trade framework group meetings and also macroeconomic meetings. Very high-level senior officials like from China, our Vice Premier Liu He will join, and from the U.S. side, the two Secretary of Finance, Ms. Mnuchin, and also the USTR, Mr. Lighthizer will join those discussions. So that's the thing I think this will provide a certain kind of long-term, we always say that the long-term dialogue mechanism for China and the U.S. Because in the past, I know, as we know that under President Bush Jr. Jr. and President Obama, China and the U.S. always have this high-level economic dialogues, like the strategic and economic dialogue or something, some name. But under the President Trump, its first year, there was a so-called comprehensive economic dialogue. But then after we enter into the trade war, this dialogue mechanisms all have been abandoned. So I think this phase one trade deal established a new mechanism for the dialogue between the consultation between the two parties. So that's a thing I think very important for us. Of course, I think maybe I will later we will touch specifically on the certain kind of agricultural trade and Chinese potential import of the more agricultural products from the U.S. Farmers and ranchers. So I think maybe later we would touch upon that. I will stop here. Thank you.
Great, thank you for that introduction. And I know Jennifer has some data that she'd like to share as well. But Jennifer, maybe in follow up to Dr. Xu, could you kind of give your outlook on the phase one trade agreement, where you think it's headed?
Sure. Again, I'm really delighted and honored to join this very, very distinguished panel. And I did want to start with a little bit of scene setting on where we are on I think 5 of the issues that are at the intersection of trade and agriculture that have really been impacted by the COVID crisis. If I can have the first slide up. Part of the reason why it is so important to focus on this is because of the very, very significant role that China has played with respect to agriculture trade to date. And so I wanted to start with a little bit of kind of where we are with the U.S. China trade agreement. As many of you know, in January, the U.S. and China signed an economic and trade agreement, the so-called phase one of the deal, which resulted in a bit of a truce, if you will, in the ongoing trade war. For agriculture, to me, this agreement provided 2 really important things. One is a set of purchase commitments, which I'm going to touch on in just a second, but the other was a number of important regulatory provisions under which China agreed to certain timeframes and to streamline the process for agricultural approvals for meat, poultry, seafood, dairy, infant formula, rice, potatoes, and a number of other grains and fruits. Next slide, please. On the regulatory side of the bargain, I would say progress has already been made, even notwithstanding the pandemic. We've seen a number of dairy companies, for example, be certified to sell product to China. We've seen restrictions on beef and poultry exports be loosened. We've seen China remove all of its tariffs on poultry. So on a number of on the regulatory side of things, the structural side of things, again, I think we've seen really, really good, some at least good progress. Next slide. It's on the purchase side of the agreement that I think there is a significant amount of concern. The agreement requires China to buy $12.5 billion more in agriculture goods this year than it did in 2017. And an additional $19.5 billion over 2017 levels in 2021. Depending on whether you use Chinese import numbers or US export numbers, that means somewhere between $34 and $37 billion in total agriculture purchases this year. So where are we? Right now, China is far behind. Through the end of March, Chinese imports were $5.1 billion compared to, if you will, a target range for the period of about $9.1 billion. So only about 37% of the target that we would have expected for the first quarter of this year. Because China's commitments, however, are only done on an annual basis. There is no requirement that China ship a certain amount during a certain month or a certain quarter. So there's no specific requirement until the very end of the year of this agreement, which would be February 14th of 2021. So it is possible, but I would say not likely, that China could make up its huge purchases this fall and winter. Next slide, please. Some of the skepticism is that China has left in place some of the retaliatory tariffs that it put on our agriculture exports, in part because the United States has left on virtually all of the tariffs that were imposed on China as a result of this trade war. So what we have not seen is an elimination of the tariffs on either side as a result of this truce. And the problem, I would say, for many of the farmers is that these purchases that will be made are largely going to come from Chinese state trading enterprises, not necessarily from commercial enterprises that would represent ongoing relationships for purchases in the future. Next slide, please. And the problem is that what we've seen so far has been a major shift in a number of the products away from purchases in the United States. As you see here in this chart on corn imports, China has heavily shifted to purchasing its corn from Ukraine. And so again, the big difficulty for the United States is, can you get back those corn sales away from what has now been a fairly significant shift to Ukraine? Next slide. If you look at sorghum exports, you've just simply seen a drop-off, in part due to what's happening on the demand side in China, again, connected to a lot of the difficulties there. If you look over again, on the barley side, you're again seeing some significant declines overall, and again, some displacement of the United States. Next slide. And fundamentally, in the largest crop that we're talking about, soybeans, what you see here is a very clear shift by China to purchasing from Brazil and other countries, and a very significant shift away from the United States. So again, the concern is whether and how, even under these purchase commitments, China is going to be able to make up these commitments. And added to this, you've seen recently a little bit of a pushback on this issue of, wait a minute, if the store shelves are bare in certain products and in certain areas in the United States, why are we exporting to China just to meet the goals of this trade deal if it's going to leave Americans without bacon or other products? Now, I think all of you out there know what a false choice that is, because we certainly could be shipping whole or half carcasses or all of the feet and organ meats and other things that Chinese purchasers have typically wanted that would not create any difficulties for the slowdowns in U.S. processing. The bottom line is a concern that if the goal of selling nearly $40 billion of agriculture goods in a given year is an unrealistic goal, even without COVID, it's an even more unrealistic goal with COVID. What's going to happen at the end of the day if China cannot make those commitments, or if we cannot provide them? So again, a significant concern about what could happen, but I don't think that's going to happen until next year. And I think over the course of this year, you are going to see China make some important strategic purchases throughout the year to show good faith on efforts to meet their commitments. The second major issue that I think has to be discussed is what's happened with respect to transport networks, where we've seen huge breakdowns. I mean, if you look at the overall numbers, the Food and Agriculture International Organization numbers would show that 1 out of every 5 calories of food has to cross an international border. So we have to have transport in foods. The problem is, for example, that airline travel is now down by more than 80%. And those airline planes are carrying not just people, but a significant amount of strawberries, seafood, perishable crops in the belly of those planes. With those planes now not flying, if those goods move at all, they have to move on much, much more expensive air freight, which means fundamentally there's been a huge cutback in the amount of those goods moving. On the sea transport side, we've got major disruptions as well. Many retailers and manufacturers are not picking up their cargo, and their containers are sitting in warehouses, full or closed warehouses. Some ports have remained open, but again, many workers are not able to show up, which exacerbates the cargo congestion. We've got huge disruptions with, again, containers sitting at our ports, in essence, clogging up the ability for trucks to even get in and out. So on the seafood side, on the sea transport side, huge problems. And then internally on the trucking side, we've seen significant problems because fundamentally the truckers don't have anywhere to stay when a lot of our hotels are closed, don't have anywhere to eat when a lot of our restaurants are shut. And we're seeing some concerns over whether or not we can keep our trucking networks flowing. The third issue that we're really seeing, this intersection between COVID and what's happening on the trade front, is with respect to labor. As many of you know, a significant amount of farm labor is done by migrant workers who come into the United States under the H-2A visa program. That requires a functioning consulate in their home country that can issue those visas. And again, for COVID safety reasons, a number of our consulates are shut around the world, and and again, our border with Mexico and to some degree with Canada also shut in terms of movement of persons. So between the lack of an ability to process H-2A visas and the difficulty with people moving across borders, we are seeing huge issues on the labor front. Not to mention that for many of our migrant workers, they're concerned about working because those working conditions require them to be in close proximity to one another. For many of them, it requires that they live effectively in a very congested dormitory kind of a setting in which they have significant concerns over their own health with respect to COVID. And then you're seeing, as we've seen very much in our meat processing facilities, a real concern on the food processing end about what it's doing for labor. The fourth issue where we're really seeing this intersection between trade and COVID is with respect to export bans, where a number of countries are quite concerned about their ability to keep food to feed their own people. And we've seen, again, as we step back and look at the numbers, 1 in 6 people around the world depends entirely on trade for their food. That means 17% of all humanity, 1.3 billion people, could not eat. I don't mean about variety. I mean, simply they would starve if there was no trade. So you've got over 30 countries around the world that must rely entirely on imported food. We saw in 2008 a food crisis where countries rushed to impose food restrictions, with one restriction begetting another restriction, and the result being higher food prices and huge shortages, particularly for rice and wheat, with many of those export restrictions persisting long after the crisis. So today, in this COVID crisis, we've already seen about 17 countries impose export restrictions on various food items, and others have imposed higher tariffs on certain agriculture commodities to counter the fall in prices and to protect their own domestic producers. While that's bad, I would say the good news is we have seen the WTO pushing back with a very recent pledge by 49 countries not to disrupt their food supply chains. They've agreed to a pact, if you will, to keep open and predictable trade in food and agriculture products, to be transparent, for any restraints that are put on to be temporary, and again, to endeavor to keep our agriculture and food supply chains up, open, and running. The fifth item that I'll just mention is that overlying all of this trade in agriculture sits the World Trade Organization, the fundamental setter and keeper of the trading rules, 164 countries that are members of the WTO. But I think it's fair to say that right now the WTO is in a state of near crisis. The United States has blocked all of the appointments to the WTO's appeals court, its appellate body, which means that decisions made by panels of the WTO are not necessarily binding anymore. I think many of you will remember that it was the WTO and its dispute settlement system that, for example, recently ruled in a couple of major challenges that the United States brought to practices in China, that China had to adhere to its commitments not to provide excessive support to its own rice and wheat producers, and that China had to administer its tariff rate quotas on wheat, corn, and rice in a fair and transparent manner. So we've been winners from this WTO dispute settlement system, particularly for our farmers and our agriculture producers, and yet that system has been effectively shut down or potentially shut down. And secondly, we've now seen recently cries that for the United States to withdraw from the WTO. Senator Josh Hawley introduced from Missouri, introduced a resolution, joint resolution to seek a United States withdrawal from the WTO, largely because of concerns that the WTO has not been effective in reining in unfair trade practices in China, the suggestion being made that the United States should withdraw. I don't think that resolution is going to pass, but it is going to put a lot of strain on what we're going to see in terms of both U.S. leadership at the WTO and the strains that the United States could effectively threaten the future of a rules-based trading system around the WTO. I will say, I think, on the other hand, that to some degree, this whole effort to potentially withdraw from the WTO has refocused some attention on, wait a minute, maybe in a time of a pandemic like we're seeing, we maybe need more multilateralism and not less. Maybe we need more rules and not less. So I think you are starting to see some degree of pushback on this idea of whether America alone is really going to be the right approach and the right strategy to help us get out of this crisis. So I'm hoping at least that out of this, out of all 5 of these issues, we're going to see a sense of a need to return to a rules-based system that people can understand and can follow as the future goes forward. But I think it's clear from just these kind of scene-setting comments that we have a lot to talk about this morning. And so at this point, I really do want to turn the microphone over to all of the true experts on this panel. I will only say in closing that as a result of a similar kind of a panel that was put on by the National Press Foundation, I've put together a list through the National Press Foundation of sources of information that would give any of you out there data and hardcore numbers and resources to look at if you want any more information about all 5 of the issues that I've touched on. They would be in this list of sources that I think would be made available on the Heartland website. And so with that, I will just say I look forward to your questions, and I'll turn over the microphone to the real experts.
Well, Jennifer, thank you. And Dr. Xu, thank you for your insights on trade policy. That really helps establish a little bit about where we are. I'd like to shift now to more about U.S. domestic agriculture and have Secretary Vilsack and Lee Strom talk a little bit about some of the observations they're seeing with the farmer today. You know, my friends at Illinois Soybean Association shared with me that U.S. farm income is down 50% compared to 2013, and crop prices are down 40% in just the last 5 years. While we've had great spring planting conditions compared to last year's rain-soaked season with a lot of flooding, you know, there's some optimism, at least from a yield perspective, but the farmer today has maybe some issues that they're facing. Secretary Vilsack, could you talk a little bit about your view of what's happening with the farmer and his or her outlook today?
Sure. Thanks very much, and certainly happy to be with all of you today, and appreciate the invitation that Governor Holden extended to allow me to participate with my good friend Lee Strom on this issue. I would say that from my perspective, how I would characterize the current state of the U.S. farmers' state of mind is one of nervousness and anxiety. Each month, Purdue University has an ag barometer, which basically looks at the confidence level of American agriculture and farmers. And for the first time since 2016, that barometer has dropped well below 100. I think it's a 72 for this month. So I think, frankly, farmers have a number of reasons for being nervous and anxious. Jennifer did a very good job of laying out some of the concerns as it relates to the Chinese relationship and the Phase 1 deal. Obviously, I think there's also anxiety as a result of potential threats to pull out of that Phase 1 deal that President Trump has recently expressed. So that there's an uncertainty about that deal, and certainly appreciate the fact that the Chinese have taken steps in the recent past to fulfill, at least on the regulatory side, many of the promises that they made in the Phase 1 deal. We are seeing a slight uptick in purchases relative to 2019, but well below where we were, as Jennifer pointed out, prior to that. So China, certainly an area of anxiety. For many of the commodities, our number one customer is Mexico. And obviously, I think there are deep concerns about that number one customer. First of all, their economy was shaky to begin with before the virus. The peso had been devalued. There were concerns, certainly because it's so much focused on oil. As the price of oil went down, the Mexican economy suffered. Will be interesting to see how they react and respond to the virus, but obviously that will have a downward impact on their economy. So our number one market for many of our commodities is, from an economic standpoint, is not as strong as it has been. There's also the issue of tomatoes and some of the specialty crops that continue to be a bit of a trade irritant that could potentially disrupt the implementation of the USMCA, an important step that's been taken to improve trade relations with both Mexico and Canada. So there's concern on that score. Looking at some of our competitors, I'm in the dairy industry, and certainly one of the competitors that we keep an eye on our friends in the European Union. They are faced with some of the same challenges that we are faced with domestically when their food service industry was disrupted, when schools and universities were shut down. There wasn't that easy diversion and redirection of food products that would have otherwise gone to restaurants and quick serve restaurants into food banks and food programs. I think we've learned that our system needs to be a bit more resilient, that there need to be improvements in that system to allow that redirection more quickly. The EU has certainly seen this as well. And as a result, in the dairy industry, for example, they recently announced a private storage program. And there is the expectation and anticipation that they will trigger their intervention system, which will essentially begin to stockpile dairy. The last time they did that, there was a significant disruption in powder prices, and it certainly hurt farm income on the dairy side. And then I think you have the overall concern that we all have, which is the global economy and the impact and effect of this virus. While I think we all hope that both in the United States and globally we have a V-shaped recovery, I don't think there's any assurance of that. I think the chances are probably likely that we're not looking at a rapid recovery globally. It was anticipated that the overall global growth rate would be roughly 3% at the beginning of this year. Some economists are now saying we may be looking at a negative 4%. That's quite a shift, significantly greater than what we saw during the 2008-2009 Great Recession. So obviously there's some economic pain that we have yet to see as a result of this virus, which may impact and affect trade, may impact and affect farm income. 30% of American farm income or farm purchases and commodities go into the trading system. 30% of our commodities are traded, and 20% of farm income is directly related to trade. So to the extent that we see a downturn of exports, that obviously will translate potentially into less farm income. At the beginning of this year, I think there was great optimism on the part of many farmers. I think the expectation was that we would have a good year. We had the USMCA agreement. We had the Japanese Phase 1 agreement. We had the Chinese Phase 1 agreement. I think there was an expectation that things would get better. Prices began to tick up a bit. That increased production, and then the virus hit. So it's a very difficult time for American farmers. Obviously, the aid packages that have been announced by the administration, resources have been distributed, will be of some help and some benefit, but they won't cover all of the losses that are incurred. And from some of the segments of agriculture, dairy, for example, they weren't necessarily in the best shape to begin with at the beginning of the year, having suffered a number of years of down income. So I think the concern here is, do we get back to this a normal? What is that new normal? How is it going to impact and affect the food service industry, which for American agriculture is a pretty significant aspect of our industry? You know, the food and agriculture industry within the U.S. represents roughly 20% of the U.S. economy. It's I think 28% of direct or indirect employment in the country. So to the extent that you see a major disruption of that part of the economy, it's just going to have a tremendous impact, obviously, on farmers and farm income. The hope is that the purchases that are being conducted of products will take some of the surplus, some of the products that would otherwise have gone into food service, redirect them. The hope is that schools reopen so that program gets back on track. But I would say it's fair to say at this point, farmers are nervous, they're anxious, and they're at the same time, there's always that hope that by the end of the year we see a global recovery headed in the right direction, the U.S. economy recovery in the right direction, and potentially an increase in exports with China and other countries beginning to purchase more.
Great, thank you. Lee, maybe you could touch also a little bit about what you're seeing in rural America today, and also the media covered issue that has gotten a lot of attention on supply chain problems with milk and meats. If you could give us your observations, I'd welcome that now.
Well, thank you, Jim. And again, it's an honor to join Secretary Vilsack. We were reminiscing before the start of this webinar about our time in D.C., and I think about how much has changed. While he was serving as Secretary of Agriculture, I was serving as a CEO and chair of the Farm Credit Administration, which delivers credit and financial services to rural America. So I was constantly looking at the pulse of the condition of the farmer across the nation. And when we talk about 10 years ago, coming out of the Great Recession, the last big financial crisis in the U.S., farmers' balance sheets were quite strong. Commodity prices were moving up, agriculture was doing well, ethanol demand was growing, which was fueling a large segment of growing demand here in the Midwest. And about 2013 and 2014, and commodity prices have been on a downward trend since that time. Global production has been great. We're producing record crops. And as a result, farmers' balance sheets have been a bit stressed, slowly deteriorating over the last 6 or 7 years. Again, this will now be the 7th crop of declining year of declining commodity prices. So heading into this trade-related issue of the last 3 years, farmers were feeling stress even before the coronavirus issue that we now face hit us. And when you look at just reports here of the last week or so, the Chicago Federal Reserve issues an agricultural letter, and it talks about the financial stress. More banks are requiring higher collateral levels of borrowers. You see about 20%, 25% of farmers are under extreme stress conditions. And so as we look at the various factors that are impacting agriculture, and now you layer on this recent shock, this black swan event of coronavirus and its impact, Jim, especially with you look at the meat sector now and the supply chain issues going on in the meat complex. Top of the news of the last 3 or 4 weeks has been the issues around processing plants and the closures due to the health and safety of the workers in those plants. And it's backed up millions of head of livestock onto farms because, I mean, really, we've had a very efficient system prior to the COVID situation. And now with that event, farmers are faced with potentially euthanizing or culling parts of their herds. And I've seen recent estimates, when you look at the efficiency of our meat processing plants, they've been running on the pork side at about 98% shackle space efficiency up until this crisis. And now with a significant cutback and the new steps that are being put in place by the plants going forward, they estimate that shackle space could eventually level out at 80 to 85% shackle space capacity. Again, that would be the new normal, which is going to continue to put strain on the livestock sector as farmers and those producers readjust the supply chain. So again, you add all these pieces up together. And I guess the message I would simply want to leave at this stage in this discussion is farmers have gone into this last 3 years in a deteriorating financial condition. As Tom mentioned at the beginning of his comments, there's a lot of anxiety. I can share that. Having a farm background myself here in Northern Illinois, I hear and talk to neighbors, and I see and feel the distress. I mean, the hope is that we can find a path to open up these global markets and the path to trade. In the meantime, over the last 3 years, Tom and I were also talking about the massive amounts of funding that is coming out of the federal government to support farmers through this time period. Here in the Midwest, particularly producers were benefited by the market facilitation payments in 2018 and 2019, which were directly tied to the injury the farmers sustained as part of the trade battle going on with China. Just late yesterday afternoon, they announced the details of the new coronavirus food assistance program, which will be additional direct payments, 32 cents a bushel for farmers on up to half of their production from 2019 for corn, and 45 cents for soybeans. Those will be a significant help, but we also look forward to a future. We cannot get too comfortable and accustomed to these flows of support from the federal government, because with all the spending that's going on, there will be a point of recognition that we're going to need to rein this in to balance future budgets. So in fiscal years 21, 22, and beyond, I foresee a tightening of federal budgets around agriculture related issues, along with other items on the federal budget. I'll pause there and thank you for the opportunity to draw some analysis on this.
Hey, Jim, I wonder if I could just add one other issue on the supply chain side, if that's okay. Lee mentioned the fact that we had an incredibly efficient system, and we certainly did. But what we didn't have in the context of this situation is a resilient system. I think our system is designed to deal with a hurricane or a flood, a regional crisis, very well. We can shift assets, we can shift resources pretty easily. But this was a national situation, and I think what we'll have to learn from this is the need for greater resilience. And let me just give you a simple example. People go into the grocery store today and they can't figure out why they can't find yeast packets. And the expectation is, well, the reason they can't find yeast packets is because everyone's baking at home and there must be just tremendous demand for yeast because we've all been sheltered in place for so long. But the reality is the reason we can't find yeast is because they don't make those small packages. Yeast basically is packaged in very large volume. It goes to bakeries, it goes to food service operations and food manufacturing that are used to using pounds, not a small packet. So our system wasn't able to convert quickly to the small packets to respond to the retail demand that we currently see. So as we look at this situation, as we emerge from this, we not only have to try to get through it, but we also have to figure out how to redesign the system in a way that it's not only efficient, but also resilient. Because if anyone thinks this is the last virus we're going to have to contend with, then they don't understand Mother Nature. This is just the beginning of a long series of challenges we will face in terms of public health. And so as we think about this, as the leaders who are listening and watching this, they're challenged, I think, to think about not only how do we get through it, but how do we improve the system? How do we have greater diversification of processing facilities? How do we have the shorter supply lines, things of that nature that will make it easier for us to pivot to divert resources the next time we're confronted with something like this, so we don't have to shut down the entire economy and threaten the livelihoods of so many hardworking farm families.
Secretary Vilsack, I think you stole my cue card because this is a great segue to talking about the future and the way forward. And thank you for those comments, and Lee as well. Thank you. In fact, Secretary Vilsack, I'd like to have you and Rob Donkowski talk a little bit about some of the technology opportunities in supply chain and infrastructure, and in particular, how does that create a path forward for agriculture in the U.S. to have a more robust trade opportunity for the farmers in the U.S. So I'll turn it maybe to Rob first to talk a little bit about some of his observations and thoughts on technology as it relates to infrastructure and supply chain. Rob?
Yeah, thanks, Jim, and thanks to everyone for having us join. Real pleasure to be on the panel with all the distinguished guests here. I think part of this is we look at the food system itself. Pre-COVID was already starting to change pretty dramatically. The interest of consumers was starting to really emerge and driving food choice and really driving that back into the production cycle. So I think that was in motion, and now I think with post-COVID, I think that a lot of those things we were anticipating will accelerate. And ultimately, what we're finding is consumers want to get closer to producers. They want to know what's in their food, where did it come from, how is it treated, those kinds of things. And I think that post-COVID that will accelerate. The question is all the nodes that are in between the producers and consumers. And as Secretary Vilsack just mentioned, there's various points in there of resiliency to consider, but also, what's the value add through the process? And today we've got a system largely built for scale where consumers are asking for personalization. So how do we balance those two things off each other, I think is something to kind of set the backdrop, right? The other is, in the COVID world, I think there's a lot of countries outside the U.S. that are, thinking through food security. As Jennifer mentioned, there's, a number, of thoughts of should we export this much? And then at the other side, folks that are in very high import situations where they're not able to service their populations are starting to rethink their food security. And, countries where you import 80 to 90% of all your food supply, the question is, how do we take that off the table to create a more secure food source for our people? And so, some of that onshoring or nearshoring of food strategy becomes very important. The current environment we're in with better technology around heating and lighting and things like that, really starts to give rise to where does controlled environment agriculture sit, whether it's greenhouses, indoor, urban farming, what have you. But what's the role of that kind of technology in the future, which, ultimately you step back and look at it, the goal here is, that from a consumer standpoint is to shorten the supply chains. We're seeing that probably in the news now more than ever, as how do we shorten the supply chains to get food from producers to consumers in the shortest way possible, not just for cost reduction, but for sustainability, for transparency of food, for food safety, a lot of reasons that come into there. And then when we look at from the consumer side, the demand for transparency was emerging significantly pre-COVID. Post-COVID, now there's questions on, if I know my food source better, then I've got a better comfort and assurance around food safety and the way that's working. Some of the events that have taken place through COVID, I think, have sparked consumers a little bit. And we've actually seen that through a survey we do called Future Consumer Index. And we see, we do that about monthly, and we can see the trends in consumers and what they're buying, where they're buying, what they're anticipating buying in the future relative to their food. And those trends are they're changing month to month, but there are some overarching themes that they absolutely want to deal with people they know, either they've bought from previously or people they find in their local community. So the rise of CSAs and distribution channels like that, we think will continue. And I think the last thing I would just say is, in the world of price volatility, and there's a little bit of conversation earlier about, do we see stockpiling in low price environments, and is that going to impact the supply chains? And if we do find more regionalization of food, what's that mean on import export volumes and so forth? So I think the need for infrastructure to be nimble and flexible is probably more important now than ever before. And we've got to adapt to these different supply chain networks and different routes to market that are emerging. So I see a real need for transportation and logistics is going to be continue to stay pretty nimble as we move forward as well. So I'll part in Secretary Vilsack, welcome your compliment there.
Secretary Vilsack, real quick before that, Rob, we've talked about this before. We had a question from one of the audience about plant-based proteins. Can you speak to that and maybe how that might affect supply chain?
Sure. We're seeing, in the whole alternative protein categories, there's really three major types of alternative proteins, right? So plant-based, cell-based, and fermentation. And we're seeing the plant-based hit early, around, the companies that are, the Beyond Meats and Impossibles that I think, most people have seen so far. As we move to cell-based, the question then becomes, how's that distribution channel work? What's the flow? How much of that impacts, animal production, agriculture, at scale? And we're not talking about a 1-year impact. We're probably in a 5 to 10 year kind of impact. But you start to model that out, and you see impacts on some of our feed demand and some of that as well. So I think that'll continue to play out. But the other side of that is, once you get into those kinds of environments, the processing facilities are very different. And therefore, going back to the supply chains, you end up in a much shorter supply chain environment. The question still, kind of remains is consumer acceptance and consumer adoption for those technologies. And, right now, cell-based is still very costly per ounce. But even at a low cost per ounce, do consumers adopt those technologies the same way they've traditionally adopted, say, their traditional meat counterparts?
Excellent, thank you. Secretary Vilsack, maybe you can speak a little bit more about supply chain. You've seen a lot with milk in the last 90 days.
Well, this question, we actually could spend an entire week discussing this issue. Where do you start? Rob mentioned the transparency and the importance of knowing where your food comes from. That means that you're going to see more and more acceptance and more embracing of blockchain technology to be able to provide the information that consumers need to have. When you talk about alternative proteins, what we aren't thinking about is the necessity of having regulatory structures that enable folks to know precisely what it is they're buying and how they can assure the safety of all of that. I would say one of the big challenges that we're facing, and since this is a Heartland China discussion, I think I should phrase it this way. We're in a competition, and I think it's an interesting competition and a challenging one for the United States. I think that the competition is with a form of government that we have versus the form of government that other countries like China have. I think China is trying to make the case globally that its system of making decisions, its authoritative structure, results in decisions being made more quickly, that resources being made available more quickly, action taking. And that's a persuasive argument in a time of rapid change. Our system is a little messier. It's a little more difficult. It takes a little more time. Arguably, it has a bit more freedom and liberty attached to it. And the question is, which of those two systems is best equipped for the 21st century pace of change? We're talking about change here today. How much change is going to have to take place in the food industry and the agriculture industry so that when the next pandemic hits, we can more easily shift the supply chain so that we're not supplying it to food manufacturing, but we're getting it to food banks so that hungry people have access to food, and we're doing it in a way that farmers aren't penalized. So, part of what I think needs to happen is there needs to be a very interesting conversation in the U.S. about how we may be able to speed up dramatically the decision making that will be necessary for any of these new technologies to take hold. There's no question there's a keen desire for vertical agriculture. There's a keen desire for alternatives. The question is, how do you structure it? And we use the example in milk that alternative proteins, plant-based beverages are using the term milk. Well, why are they doing that? Well, they're doing it because milk has a certain reputation, a certain nutritional reputation, and you get the benefit of using that reputation. But should you be able to get the benefit of that reputation if you aren't living up to the actual nutritional value that a milk product, traditional milk product, actually has? And that's fundamentally the regulatory system is required to answer those kinds of questions. So I think from a technology standpoint, in addition to blockchain, I think we also have to look at regulatory structures and making them much more efficient. Shorter supply chains, diversification. I think the meat processing industry is facing a huge challenge. How is it that they get to a point where they will not have as great a disruption the next time something like this hits? I mean, when you have the kind of manual labor that's involved in preparing our steaks and our pork chops, is there a way, will there be a way in which you can create a working environment where people are not as significantly at risk as they would be and as they are today based on the closeness and proximity of where they work? Is there automation that will take over or take place? The dairy industry, the processing facilities have been certainly mechanized and automated to a great extent, so they didn't face quite the same level of disruption that we're now seeing with pork and beef. The question is, will the processing facilities in the U.S. automate? Will they diversify? Will they get smaller and have more of them? These are very, I think, significant issues that the meat industry in particular has to address. And I think there are issues relative to sustainability issues. I mean, we're not going to have the water that we are used to. Well, in the Midwest, we may be complaining about having too much water today. I can guarantee you the folks out in Colorado and Wyoming and Montana and California, they'd love to have the water we have today. And they're going to be faced with serious water shortages. And how do we continue to farm with less water? And what technologies need to be embraced in order to continue to assure the level of food supply necessary to feed an ever-increasing world population? You want to talk about technology, we've got to figure out how to do this. When I was secretary, we used to use the statistic that it looked like we needed a 50 to 70% increase in food production to be able to meet the demands of a growing population, which would require changes in technology in the next 20, 30 years that matched what we did in agriculture for the preceding 10,000 years. So there has to be an acceleration of the adoption of technology at a time when we're not investing the resources in research and development in food and agriculture that probably should be done. Are we going to see a change of what farmers do today? They grow commodities and they get a commodity price. Will farmers in the future be growing ingredients, specifically designed crops for specific purposes that would be tied to people's health so that you have personalized food? as healthcare. I mean, there's just a tremendous amount of opportunity here, but it has to be prioritized and it has to be structured. And I think part of the challenge in the food and agriculture industry and government is to make sure that we're all working sort of in the same direction to make the system more resilient, more sustainable, more transparent, and at the same time continue to be efficient with the understanding, and this is a big issue here, with the understanding that what we've been used to in the US, which is relatively inexpensive food, that there may at some point in time, there has to be a recognition that there's a cost associated with all of this, and are consumers willing to pay, and at what level are they willing to pay for all of these things that they want. They want the local food, they want the regional, they want to know their farmer, they want the transparency, they want the latest and greatest. Well, there's a cost associated with that. And are we willing to accept the fact that maybe food in the future might be a bit more expensive in the US?
Great. And I think the opportunity for farmers to produce alternative crops is a big opportunity. And I'd like to shift now to Rajiv Singh to talk a little bit about that. Rajiv, today there's a report out that the Chapter 12 bankruptcy filings by farmers is up 23% over just a year ago. And that's very disturbing and has been a looming problem over the farm economy. What do you see as paths ahead for U.S. producers to establish stronger financial footings, maybe with some of the opportunities that, for example, Secretary Vilsack spoke to? Do you have anything from a macro or micro perspective that you could share with us, Rajiv?
Absolutely. So, Jim, I think as Secretary Vilsack and Lee both mentioned earlier, this time is quite different in the ag sector. Just even compared to the crisis that we had earlier, agriculture is a very cyclical sector. We've seen cycles, and I've been on the credit side in agriculture, and I've helped a lot of clients basically see through those cycles through the proper structuring of financing. But I think this is a fairly tricky situation because specifically it's a black swan event in agriculture in a way that we haven't seen in recent history, and it is coming at a time when we are having a trade war and a number of other issues that impact producers directly. But if we step back a little bit, so clearly there's a role for the financing portion of the supply chain to play in terms of making sure that they can keep the flow of capital going into the sector. Because ultimately these are all cycles that will be sorted out. And I think that the question is, how does capital organize itself and price itself and structure itself to be made available to producers, which I think will happen. But I think we are in the early stages of banks trying to figure that out. But in the long run, I would say, if you look at the food system, as a whole, any system you start with where something is produced and where something is consumed. For the food system, just the global food system, the topic of today is if you look at the next 50 years, the U.S. Heartland and China are the two anchors of the food system. U.S. Heartland on the production side and China on the consumption side, just because where food can be best produced naturally. I think U.S. and Brazil are one of the best placed geographies in the world for the next 50 years to do that, and where it's going to be consumed largely is going to be in Asia, and China's anchoring that. So clearly what we are looking at a food system where the two anchors are on the table today, and they're having lots of issues to resolve, and that is translating into the financial stresses that we are seeing today. So these two anchors of the food system will have to really figure out a way to work together for the global food system to work. And I think then the financing channels will be able to organize itself and price the risk in the system, because right now the big unknown is the geopolitical trade risk that is very difficult for banks and other financial institutions to price in. And so I would think that's the biggest need, is the two countries to figure out a way to work together in a way that is going to be predictable for the finance sector. But in the long run, I would say the situation is not as grim and bad, because you have one of the things that hasn't been priced into the farmer balance sheets clearly is the value of U.S. farmland. I mean, I would say that is going to be one of the things, one of the items that is going to prove itself out in the long run. As I said, there's no better place to grow food than in the U.S. heartland in the world, and that's going to continue to be, despite all the challenges we are facing, the ecological sort of transformations we'll have to face. That's going to continue to be true by and large for the next 50, 100 years or so. And therefore, I think that value getting reflected back on balance sheets will help matters. But for that to be reflected back, the global trade flows need to come back to normal. So I'd say I think that's the big thing. I think we need to have some predictability in the way global trade in food is going to be conducted, because we know naturally that the food will be produced most efficiently in the U.S. heartland. Food is going to be consumed by and large at scale in Asia and China, and if those fundamentals are in place, the people who participate in the food system, the production side, and the companies that participate in making it available to people are all going to do well in the long run. There's enough value creation opportunity. There's enough wealth and middle class income growth that is happening in the world to support all of that. I think the governments need to play their role to make sure that the disruptions and uncertainties are kept to a minimum. And so I would say that's the big picture. Long term, I don't see the situation being as grim. I know we are going to a particularly challenging period right now, but I think in the long run we are in a sector that's going to do great for both countries.
Great. Thank you, Rajiv. Rajiv, I'm going to transition now to technology. You touched upon it, but before I do, Min, we have a poll that we'd like the audience that's on the call, the webinar with us today to take, and it ties into technology. Can you flash that up and ask everyone, Min, to place a vote on the question we have? If you could, everyone on the call, please answer this poll quickly, and we will then transition back to some questions. So take a 30 seconds and answer this poll, please. Hey, Rajiv, and Rob, I'm going to have you take the next section, guys. We're going to talk about technology and the impact upon the future for the farmer. We've had a question submitted by someone about plant-based meat, and there was a study out about a year ago showing that plant-based meat potentially could replace a large portion of the traditional meat channels we know. And so how does that impact the farmer and disrupt the farmer, or should the farmer be concerned about that? But also, I think it's really important. I think Silicon Valley, about 5 years ago, we've discovered us. They discovered that ag was a place to put money to work. And according to Ag Funder, farm tech startup investments have grown 370% since 2013. Reaching almost $4.7 billion last year, put into 695 deals. Talk about some of the leading edge opportunities that you see in supply chain traceability, Internet of Things, things like that. It looks like, before we jump to that, it looks like soybeans just slightly wins out over pork on this question. Is that the correct way to read that, Min? All right, good. So Rob, I'll turn to you first. And, talk a little bit about some of the things you're seeing from a technology perspective. You already touched upon that earlier, but please provide a little more insight there, if you would.
Yes, certainly, Jim. Thank you. We tend to think about innovation in the ag and food world in kind of 4 categories, is the way we think about it. And so, science and biologicals being 1, kind of automation, mechanization being 2, technology and data being 3. Then all that kind of leads you to the 4th, which is business model innovation. I think on the first, the biological science side of things, the hope, the promise, the potential around CRISPR, Cas9, and some things around that really, I think, make it a pretty interesting dialogue. But the biological side, I think, really spurs a lot of the alternative protein investments, because, again, going back to the consumers are asking for a much, an ideal chemical-free world. But they're looking for things that are more natural, and that's, there's comfort in, looking at a label that has 5 ingredients, not 25. And so I think that drives a lot of innovation in that space. The other thing, I think we look in the Midwest, and it's, Jim, you and I have talked about this a number of times. Silicon Valley found ag, and you got kind of 2 different kinds of investments going on, I think. And on one side, you've got people who are very, very adept at entrepreneurialism, serial entrepreneurs, raising capital, taking companies public, and bringing some really interesting technologies to market. And they're very oriented more towards profit. More people, I think, in the more in the center of the heartland, probably more orientated towards purpose. So how do we leverage both kind of the purpose profit mix? How do we coordinate in the Midwest where they're every state's got their own kind of group focused on ag tech? How do we coordinate better without stifling innovation? I think is a real challenge and frankly a real opportunity in this current environment. I think when you pull the technologies back, you look at automation and the tech data worlds, though, I think it hinges really on two things. I think the link of IoT to analytics is really, I think, the most fundamental link. So we can talk sensors, drones, imagery. Those are essentially a type of IoT connected device. But ultimately, pulling that data off, coordinating that data, whether it's precision agriculture, precise recommendations at a field level prescription, or more precision treatment of plants. When you think about see and spray technology, a lot of that is an IoT analytics kind of equation. I'm thrilled about the size of the investments. I think a lot of the investments have, and the startups have got to continue to focus. If their target market continues to be producers and farmers, then they've got to focus on the things that matter most, which I think are really around kind of a risk, profit, and effort equation. And so if you're not really impacting that positively for a farmer or producer, then the adoption rates will be low. So if you can take a risk off the table, or you can increase profit, or you can lower effort, that combination of those three things, I think, are fundamentally what drive farmer and producer level adoption. So tons of room still, I believe, in the space to grow in the technology and innovation areas, though. So Rajiv, maybe turn it to you.
Sure, and thanks, Rob. And I'll come back to your particular question, Jim, about plant-based protein and the impact, the likely impact on the both in the producers and generally on the sector. But I would say just maybe linking it back to the flow of finance and capital. As you mentioned, I think the flow of venture capital into ag tech has been on the rise, and if you combine that with sort of ag tech and food tech, that has been a fairly significant number. I think for each of the last 4 or 5 years, it's been north of 12 billion or so. So that and a lot of that is anchored in the U.S. again. So a lot of that capital is going into companies and startups and university campuses that are here in the U.S. So clearly that's that's another avenue for U.S. Heartland and China collaboration. And I would say just in terms of trends there, I think they've been very well highlighted already by Rob and Secretary Vilsack. I think for China, the food safety issue is an issue of national importance. So clearly, anything that we are doing here that helps on the in terms of making food safer and food supply chains traceable and more consumer friendly, there will be a natural demand for that from China, just even from a national, not just from a consumer perspective, but from a national interest perspective. That's a big number one topic that has been highlighted by the leadership there. So I think that's going to be one area where U.S. startups will be looking very keenly in terms of how they could collaborate and bring their products and services into service in a way that can be implemented in China or connected to China in some way or fashion, because that's going to be a very confident sort of way for them to realize value. And I think the second big topic is protein. And China is, if you look at the Grow Intelligence came up with a report recently, China is going to be the biggest protein deficit region of the world in the next 20 to 30 years. So they will need, they will be looking keenly to supplement that deficit. And that's where some of these alternative proteins come in. But my sense is I think a lot of that deficit will be fulfilled by making our existing supply chains more efficient. That's not going to go away. I mean, if I look at the example that I always give when people talk about Beyond Meat and Impossible Foods burger, plant-based burgers, is that when you go back to the Coke and Pepsi Cola wars, and when people were looking to substitute for sugar, and they started with NutraSweet, the first artificial sweetener that was out there, low-calorie sweetener. People predicted that that's going to just take over the market, and sugar's done. But 20 years later, or maybe even more than that, that alternative sweeteners are less than 10% of the beverage ingredients or sweeteners market. And I think that's pretty much going to be the same here as far as protein is concerned. I think these plant-based proteins and alternative proteins will definitely have a lot of momentum for good reason. There'll be a lot of consumer interest. But at the end of the day, I think they will end up being, on the edges. They'll be 10% or so of the market, because the core protein industry, animal protein, and other traditional plant proteins will definitely find ways to become more efficient, and those supply chains will become more efficient, both in terms of resources, use of water and energy and so on, but also in terms of nutrition that they offer. Because right now, it's, people only measure calories, not nutrition. The nutritional outcomes, I think, will be a focus there. And some of the examples that I'll give is, I think when you look at Rob, you mentioned CRISPR-Cas9 and some of the other gene editing technologies. One of the big challenges has been transgenic traits have had a bad public relations problem recently, in the last few years, and that was primarily because the GMO traits that we saw in corn and soy were all input-based traits. They were introduced to make growing of these crops easier and better, more productive. But I think what we are seeing now is output-based traits, where the outcomes for consumers and the animals in the animal feed sector are going to be much more in focus. So what we are seeing now in many of these crops is traits that are going to make these grains and other produce more nutritious, less hungry for water, and travel better, and so on. So I think so you will see a lot of those, whether it's gene editing or other transgenic technologies, come up with versions of food products that will be able to help us supply with protein and other nutrients in a much more efficient manner. And I think that's where I would say a lot more of the action is going to be in the next 10 years or so. And I certainly hope that both the U.S. Heartland is open to those ideas in terms of it's difficult to change. Especially for farmers when they are looking at, they don't have the luxury of the Silicon Valley entrepreneurs. They can't cycle in and out of change processes in a matter of days. They have to look at growing seasons, and every farmer has a limited number of growing seasons that they can look forward to. So it's especially risky and a difficult thing for them to do. But I hope, and I certainly see this, that they are going to adapt some of these newer products and technologies that are going to be coming up, and then also on the consumer side, and more specifically in the government side, that they will be open to looking at some of these newer food products and helping them get introduced into the food systems in a more positive manner than simply to create barriers. So.
Great, thank you, Raji. Hey, Rob, real quick, there's a lot of excitement about new technology, but a question was submitted from the audience today about the general labor and how do they prepare for a food system with more technology, and what is labor's role as new technology occurs? I'm sure you've thought about that. Do you have any observations?
Yeah, and if you don't mind, just two quick comments on the alternative protein thing, just to keep in mind. I think one thing is a global perspective. We are not in an environment today where you can just simply segment to consumers. There has to be a hyper segmentation mentality, because we got multiple generations, multiple kind of ethno-demographic things. So it's really it's really an environment that, again, analytics plays big on the hyper segmentation side. So I would just, really think about that. And the other one I would just say on alternative proteins, the new driver, as Rajiv mentioned about nutrition and kind of thinking about those things, the new driver is, can we create food that is less prone to viruses and impacts like we're seeing this pandemic? And so that's a new emergence of folks kind of thinking about that differently. So, but your question on labor, I think at the end of the day, even, if you look at most of the manually harvested, products like a lot of produce and berries and nuts and things like that, I mean, there's been a drive for automation, and it's less about, replacing labor. It's more about just finding labor, and so as Jennifer mentioned earlier on the H-2A visa situation and immigration reform, that's important, but it may not go far enough to produce at the scale we need. So we do see that it's not so much that the machine replaces the person as much as the person needs to think about how to interact with a different machine going forward. And so we think that relationship is more symbiotic than a pure replacement kind of relationship, and then, we think, Secretary Vilsack talked about some of the meatpacking, things going on, and, potentially, 15 plants, flow through about 65% of the meat, right? And so do large plants make sense going forward to prevent outbreaks? Can we react fast enough? Is the labor concentration too high in those plants? So we think about automation levels, or we think about making those plants smaller. There's, those are the options, not, both carry pros and cons to them. But I think, again, even in those plants, it's about how do we use automation, not just for efficiency, but we also think about worker safety, on a much different level today as well. So I think labor is going to play a big piece. A lot of people get spooked by it, thinking that, the robots will take over the processing, but you look at other industries that have gone through that, and labor forces have stayed very high, yet the industries have become safer and far more automated using automation and technology.
Great, thank you. Hey, Lee, you had raised your hand about a technology observation.
And just quickly from my perspective, over the last 3 or 4 decades, technology has helped us to produce more, produce it more efficiently, and supply it to the channels more efficiently. I think with what's going on now with the COVID crisis and the consumer societal changes and their perspectives, we're going to focus a lot of technology in the next decade on meeting the consumer shifts in demands. Just for instance, one of the interesting things we're learning about this crisis is there's a lot less food waste going on currently, because when consumers go to buy their own food and prepare it themselves, they waste less than when they go out and don't finish half a meal at a restaurant or something like that. I think the technology is going to focus on the resiliency of our food system, the transparency of our food system, and focused on getting what the consumer wants more than just producing more. I'll pause there.
Good. And we have a lot of questions coming in. I'm going to try to address some of those now, particularly on what I'll call some societal issues. Dr. Xu, the Chinese consumer spending power has changed because of the trade war, but even maybe more so because of COVID-19. Can you speak to that, Dr. Xu, about how the consumer in China maybe is changing their purchasing patterns?
Okay. I think first, this COVID-19, at least in the first half of this year, I think it may cause great damage to Chinese economy, and also some, I think, income. Those people, in particular from the certain part of the middle class, I think their income and also the wages are decreasing. So they need, maybe in the short term, I think there was a certain kind of restriction on their capacity to maybe make, maybe spend more. For example, I think the first quarter of this year, Chinese, we have seen the statistics, the Chinese GDP declined at a rate of 6.8% compared with the same period last year. And also we saw that the so-called urban survey the unemployment rate is about 6.2%. But that's I think that's different from the U.S. here. it's only concerned with those residents in the urban area. So it doesn't take into account of those so-called migrant workers, because we still have this dual track system for those laborers. So the actual unemployment number may be even much higher than that. So I am not sure about it. Maybe I saw some statistics. They estimate that maybe 100 million unemployed people. That's a really very high, I think, figure. So that, and also we see that this the Chinese foreign trade companies, they encountered what we see that as a dual attack. I mean, at the February and March, they experienced in China ourselves. We are in those epidemic. And now, when we gradually recovered from the epidemic, and we saw that our largest overseas market, we falling into this global pandemic. So those companies, in particular those manufacturing companies, they are experiencing great difficulty because they don't have those export orders. So that, I think, has caused a great disruption to a lot of companies going bankrupt. So I think that in the short term, maybe I also say that maybe this year for China's overall whole year GDP growth, maybe it's about 2 or 3% growth compared with last year. So we cannot see. I don't see maybe very drastic increase of the purchase or spending for the consumers, but also we see that according to maybe IMF estimate that next year maybe China will see very much higher growth rate for Chinese economy. So maybe at that time I think maybe we're gradually getting back, and also the consumers, they will gradually retain their spending power, spending capacity. So
Excellent.
I think
thank you. Hey, Jennifer, another question from the audience is about the mix of U.S. ag exports and how they're changing with the current challenges with China trade. Can you address that, how the mix might change in the near term?
Well, I mean, part of it is, again, looking at how much of it is going to be driven by the deal, the China Phase 1 deal. So to be very clear, what the China Phase 1 deal said is that the agriculture purchases had to be increased, again, as I said, by $12.5 billion. And then within the annexes to that agreement, you clearly see that there is a specific set of products where China has to make these additional purchases. Again, it specifically lists out oil seeds, meat, cereals, cotton, seafood, and then certain other agricultural products, including alfalfa, citrus, dairy, dietary supplements, distilled spirits, dried distiller grains, essential oils, ethanol, fresh baby carrots, again, but not necessarily other things, fruits and vegetables, ginseng, pet food, processed foods, tree nuts, and wine. So the clear implications of at least this piece of the China Phase 1 deal is it is going to push purchases to those specific products that are included on that list, because that way China, if you will, gets credit for meeting its commitments if they are the items that are on this Phase 1 deal list. And arguably, China may decide to purchase everything else from somewhere else. So I think that you're clearly going to see is that to the extent that China is committed to fulfilling these requirements, there will be some direction. The other piece of it, like I said, is the concern is that a lot of these purchases are likely to be made by China's state trading enterprises. And some of it may be purchases of things that there may not be a specific demand in China for right now, but the idea is that they desperately want to show that they're fulfilling these commitments. So some of those goods may simply go into storage or something else. So it's hard to say how much of a connection there is going to be between Chinese consumer interests and consumer demand versus what the purchases are that are going to be made by China, because they are going to be heavily dictated by the terms of this Phase 1 agreement. So Again, I think it's hard to see right now. What you are seeing is China coming in and making some strategic purchases that are clearly designed to show that it is trying to meet the commitments that are under the phase 1 deal. And unfortunately, I think that the terms of that deal are gonna be more important, at least for the next 18 months, than necessarily consumer supply and demand needs within China.
Great, thank you. And one last question for Secretary Vilsack. Fellow board member on the U.S. HCA board, Jeff Mosley's on the webinar with us. He asked some questions about food safety and federal funds for increased inspections, particularly at processing plants, and if the USDA, or excuse me, the FDA might approve new radiation technologies for the meat industry or protein industry. Do you have any observations or thoughts on that, Secretary Vilsack?
Well, I think Lee Strom basically answered that question earlier when he suggested that we can anticipate great support today, but we're going to see declining budgets in the future. And the reality is it's going to be a very tough situation for government agencies to determine prioritization of limited resources. I mean, we obviously can't continue to sustain multiple $trillion deficits on an annual basis. So I think there is going to be some significant set of decisions that have to be made. One of the challenges that we always have in food safety is the fact that we've got 15 different agencies of the government involved in food safety. Everyone's got a little piece of it. The FDA does most of the food safety issues. The USDA's got meat, poultry, and processed eggs. The question has always been whether or not there are efficiencies in terms of maybe consolidating some of those responsibilities into fewer agencies and therefore less overhead, and maybe that would allow you to direct resources into increasing inspections. I think we're going to get to a point where I think we understand or are beginning to understand some of the challenges that are inherent in food safety. We learn more and more and more about the various issues with food safety and how our system of inspections may need to be upgraded, may need to be automated, may need to be changed in order to meet what science is now telling us are the real threats in terms of food safety. So I think you're going to see an evolution of that process. I don't know that we'll necessarily see more people, but you may see better and more efficient inspections because we'll know more about what to look for, where to look for it, and how to concentrate the resources we do have. But I think anybody who's going to suggest that there's going to be a lot of new spending in the future, I think it's going to be incredibly difficult to match up with the current situation and the deficits that we obviously will be confronting and the impact of that. I mean, just to give you an example of Social Security, there's some expectation that Social Security may not be able to make full payments by the year 2030. If that's actually true, then obviously policymakers have got some serious decisions that they're going to have to make relative to allocation of resources.
Excellent, thank you. We have only a couple minutes left, so I'm going to do just a really quick rapid roundtable and ask each panelist to give one word to describe the future of U.S. China ag policy and trade. So I'll start with Jennifer. Do you have a word to describe what you think the future looks like?
Volatile.
How about Secretary Vilsack?
Uncertain.
Dr. Xu?
Yes, uncertainty.
Lee?
Hopeful.
Rob?
Required.
And Rajiv, you're on mute. How about Rajiv?
Murky.
Murky. Well, good. Well, this concludes our event today. Really appreciate all the panelists' comments and observations. I think, as Secretary Vilsack said, I think this could go on well into the late evening this evening if we wanted to. There's so much to cover here. Hopefully we'll do this again. And there is another event coming up that we'll get out to you in June. Min will be sending that out. We hope you can join us again. And if you do have other questions, I'm sure we'll try to address those through Min. And again, thank you for joining us, and stay safe and healthy. And we'll look forward to doing this in person, hopefully very soon. Thank you, everyone.